And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, November the 30th, 2022. Well, it was an incredibly interesting day. I am going to say that to begin. That we got the GDP number this morning, and I just kept waiting for the reaction and waiting for the reaction and waiting for the reaction and scrolling to go, did this news come out? And then finally we got a little bit of a reaction, and then nothing. And then the market opened and still really nothing. We drifted down. We got a little bit below 11,500. And then we rallied up a little bit. And, et cetera, et cetera. And I kept waiting. I think we had a PMI Purchasing Managers Index or something that came out. That gave us a little pop. And then it came back down off of that. I then suddenly turned at 10:30 out here on the Pacific coast, 1:30 on the East Coast, and that's when Jerome Powell stepped up to the mic to give his stump and speech. And I guess he said basically one thing. Well, we could take into consideration not raising 75 basis points, and that was all that the market and the players that were hanging by a thread needed to hear in order to enact the move that they needed to have, which of course was get out of the way. We're taking the market higher and we're likely not going to stop. It wasn't quite as intense as this because it didn't happen pre-market. There were plenty of participants here, but it was just as intense. And it made clear, as I discussed on last night's update, today I felt would be the day where we will have clarity on the short and near and short-term directions. That GDP, in conjunction with Jerome Powell, would make it very clear what we're going to be doing, at least for the balance of this week, likely also into the next 2 weeks. So, how does that affect the S&P, which even up through yesterday, I was declaring that intermediate wave 2 was over and we're dropping in the beginning stages. And it continued to look pretty good for that. Not the cleanest, but pretty good. Up until the moment Jerome Powell stepped up to the mic and gave his little stump speech. Then the market took off. Okay. Looking here on the daily chart, this is Jerome Powell speaking. When we put it in the context of the entire move, it actually doesn't look all that bad. There's the all-time high. Here's the stump speech. Here's the reaction to the CPI number, et cetera, et cetera. So we've had pretty strong rallies, even within this intermediate second wave. I'm going to continue to hold to that. Now, I know I keep promising you an in-depth look into both the S&P and the NASDAQ, a deep dive to bring things up to date and what now possibilities exist. I keep running out of time and I need to make my update to get it on so that I can have a presentation for today. So I don't necessarily haven't given myself the time to go back and pull up some of the alternate counts that I have that have moved in and out at times and can come up now so that I can review them, discuss them, talk about this is what the market would have to do to engage this particular count, and these would be the implications. Okay, so right now, daily chart, it doesn't actually look all that big. So I'm going to take it down now, and I'm going to go to the hourly chart, and let's give it a shot at getting it open from there. So we're basically looking at what I had marked as a C wave here, and then put the 2 above it. And then this, I'd counted out and felt it could count down to here as 5. And I felt this was a 3 wave, it could have been a 2, and then a 1 and a 2, and off we go. So what's the alternate here? A, B, very quick C, and that gets marked an X. 1, 2, 3, or A, B, into the C wave. Possibly this was mostly a third, and then we get a little 4 and a 5, or it's an A. We can go A, B, C, A, B wave, and then a C wave still to come within it. There are a lot of little things we're going to have to, again, let this play out. But now what we're looking for is a second ABC counter trend rally to finish this larger intermediate wave 2. So what can we look at to give us some indications of where can this market go now in this second ABC? And the first place I would look as I would run fibs there and see what comes out. Because the first ABC was, large enough. Let me go back out here. I'm sorry, keep flipping. The first ABC went from 34, I think that was 34.93. 30, come on, tell me the truth. 35.02. And it went from 35.02 up until that high, which was 40.50. So that was a pretty large. Now, if I'm looking for the possibility, what can the second one look like? So let's remove that and let's call this, and we're just going to go up to there, down to the X wave. So we're going to make it even bigger and then see what we got coming in. Now, the second ABC has the potential to be 6.618 of the first ABC, the first three. It also has potential to be 0.382, 0.50%. So we're going to use the same ones, but it's going to be an A and a B and a C. That'll get us there. Again, as a wave 2, it cannot cross over 43.27. Then it's going to be in violation, and it's breaking a rule of where wave 2 cannot overlap or exceed the starting point of wave 1. And there's where that would happen. I will go over the alternates. This I promise, because tomorrow I'm going to make sure that I get that podcast done and get it posted, because it's going to be important, because we have additional information on Friday via the employment situation number. And that may or may not change that could into a will. But again, it didn't say that he would pull back. He said they could. And that was all was necessary. So what we are going to be looking for now is a continuation. We have resistance up here now, 41.58. Well, we know we have it here. We got past that absolute first level. And we had actually gotten up almost to 4,100. We got to 40.50. We haven't been to 4,100. So we know we had resistance there, additional resistance there, and then that it kind of went up from that level. And so we will keep track of that. So it's a strange situation that we're kind of in, but not uncommon for wave 2, as I've described before, to need additional time. And the market needs more information to really decide where it wants to go and how it's going to get there. Now, also add into that the other thing that I have really been talking about, and that is that we have expirations almost every day in the S&P and the SPX every day, and the NASDAQ pretty close to every day. We have weekly expirations in everything else. We have monthly expirations in everything, and then we have quarterly expirations in some things. And so there's derivatives on top of derivatives, and the larger players, the larger banks, the investment firms, the trading firms, they trade everything, and they're big. And so it involves a lot of hedging, and there's cross hedging, and there's risk on, risk off type positions, and knowing when you're going to have to take that risk off or put it back on, et cetera, or when you're going to lift a hedge. And so we've now seen it twice in a relatively short period of time. The first one was here on that CPI number. The market just roared. And I had felt that we were going to be in that same type of a situation where a little piece of data that had something to do with interest rates would bring us about this next serious pile on, which would be nothing more than risk off type of a trade, taking risk off. And they got enough information that because things would expire on Friday and the following Friday, that the decisions are made, and they're big positions, and they just move in and they just do. So again, it's not honestly reflective of, well, what really is going on. I mean, are we totally bullish? Now we're going to go back up to new highs, et cetera, et cetera. It's like, to be honest with you, I doubt that that was even a part of the conversation or a part of the thought process on whether to take the risk off or put the risk on. So the mad dash to get long necessarily wasn't really related with, oh, now we're just feeling great and he's going to pull back, he's going to do all this stuff, because he really didn't say that. He said, well, maybe we could discuss it. That's basically what he said. So here we sit, and it's still in the corrective process. We're looking for this ABC. I cannot tell you if it's all done yet. Wave A could work out to be a 5, and then it's going to be a zigzag up. This one kind of was, but sloppy. So something in that nature, but it's being kicked off by that. Like this kicked off in the middle of our third wave, middle of our C wave. So it was the wave 3. So again, is it A, B, and this is the C wave, and the C wave is going to reach up this far? Very possibly. If that's the X, we got an A and a B. Could that be? Well, yeah, it could. A, B, and this is 1, 2, 3. Is it 1, 2, 3, A, B, C? I don't know. We're going to need more information, but we can start to put some parameters around where can this actually end up. And even if I have to go from here to here, or from here to here to here, to give this some room, even if I'm doing 1, 2, 3, and we're going to come down in a 4, then we still have a 5. Even if this is not going to be, this is going to be all of the third wave of the C, or is it wave 1 of C? Still need more information. But what I am saying is that I believe it's going to be, that's the X and ABC here in the S&P. Going over into the NASDAQ now, it's even more clear. And again, I was looking for, but I thought the X wave could have ended here. And now I'm more confident that it likely ended here. And that this is an A, and this is the B wave, slightly irregular. And then that's 1, 2, 3. And now we're in a small 4, and we're going to get to a 5. Now, what I can try the same, we go back over to the S&P, you see where we connected our lines was we did the entire second down to that bottom to where it all blasted off. So if I go over to the NASDAQ, we're going to go, actually, I probably should have taken it to that bottom of that X wave right there. That would have been much better. And I will change that in a jiff here. Let's go from here, pull this out to our 4-hour chart. And I want to look at this entire sequence, right? Up to there, down to that X wave. Now bring it back down to the hourly and see how well I did. Not too bad. I'm gonna make that good. Hold on, let me get in there. This completion point is, oh yeah, that's that one. 115.27. 27.75. And the middle point is 21.18.75. Okay, we'll get there. 21.18.75. And the beginning was 4 on this. I'm going to trust that one. So I'm going to say okay to this. Everything gets moved around a little bit. Then, so on that basis, 618, so the second ABC being 0.618 of the first ABC, Fibonacci relationship, 12,537. Well, we've been looking at 12,500 several times. It's come up, it's come up, it's come up. It's still there. Now, I can tighten this up a little bit by going here, and I'll pull it open, that if we have the A and the B, now we can do the internal for the whole C wave. So we can do that. No, we can't. I did that wrong. Hold on. I can do it here. If this is 1, 2, 3, and we're going to just give us a little estimate on that 4. We're looking for what this fifth wave is going to bring for us. We can come up to here, oops, to here, and then bring it down, say to there. That's giving it a little bit. Now, what does that look like? Well, we have that 618 at 12,378, and then we have another 12,472. So you can see it gets a little bit thick up in there. So I'm still not really looking for a whole lot. That I think that the market does have some upside left, but I think this whole zone is going to get pretty thick and it'll have a hard time. But it needs to take more time to figure out what its next move is, figure out what is these employment situation numbers going to tell us on Friday. What do we got coming the next coming week before the Fed meets, right? This Friday's the 2nd, next Friday's the 9th, the week after they meet. So we got to get through one more week, a week and a half, until we actually do get the meeting and they can tell us exactly what they're going to do. In the meantime, I am just going to count it. I am just going to trade it. Again, I highly suggest and always do to try to have stops in. I talked about it on the update last night, trying to have stops in. What would be a surprise at this juncture is if all the risk has come off from whomever needed to move it, and we'd come down just as quickly as when we've gone up. I've seen that before as well. Now, with the NASDAQ quickly back above 12,000, it just needs to get up to 12,152. Get above that high, and it's done. It could be the second ABC. It's well above the A, top of the A wave, did that pretty easily. Now it needs to get up here, but that puts our other resistance areas. And again, that 12,500 level, a little bit below to a little bit above, remains very consistent in this bigger picture. And I bring it out to the daily, that bigger picture. The market, I still don't think will come up and give a test to 13,741, which is that high, that August high. I think in between all this and just above that 618 resistance, we have the 200s at 12,610. Both the EMA and the SMA, they're kind of sitting right there kissing each other. So we've got the resistance, and the move, yes, today was powerful. And I said, what are we going to do when we have to stare that the NASDAQ's going up 500 points again? And sure enough, it did. It had just the bar before he stepped up to the podium. It was hitting 11,497. Oh, 11,465. And then within this thing, that's the daily chart. The low today, 497, as I said. That's what it was trading at on just a back above 11,500. He steps to the podium and bam, it took off. It was incredible. So it was a 500-point rally. So pretty amazing that they'll do this. Again, keep it in perspective. I'm not going to attach a bull or a bear sign to this. I just won't do it because I don't think that when it was going on, it was cover, duck and cover, risk off. And it comes from a lot of different places. All right. So for tomorrow, I am going to look for follow through because now guess what? Now that we've done this, we've got Apple up 6. We had Amazon up 4. We had Google up 5. We've got Intel up over $1. Meta moved up 8. Microsoft moved up almost $15. Check out how many strike prices were gone through and these issues, and you'll realize why that buying continued. Gamma squeeze, we got an expiration on Friday, and now they've got reason to put the squeeze on. They're doing it, and it's going to go. So add that little tidbit of what traders need to do so they can have this stuff expire where they want it on Friday. It gets more interesting, but we play into it every single week. So again, I'm not looking further out to go like, oh yeah, our interest rates are coming down, inflation's all taken care of, because I know right now that's not the way and it's not the truth. It isn't under control. They're trying, but it's not done yet. The world is not a beautiful picture right now. So don't try to play that interest rates can come falling back down and, heaven on earth will re-exist. So I do think we'll have some downside tomorrow, but again, it's going to be a little bit surprising for me to see it come in pretty strong unless there are particular reasons. Now, tomorrow, I think there are lesser numbers, and I could double check. And let me see if I can go up there and do that. Just real quickly. I know you can't see this part, but I'm just going to go over to Econo Day. Econo Day. And see if we pick that up. We did. Beautiful calendar. And so on Thursday, we have, jobless claims and personal income. And then we actually, tomorrow could have some good moves. Jobless claims at 5:30 in the morning, or Pacific Coast, 8:30 Eastern. ISM manufacturing at 10 a.m. That one could be a market mover. Let's see. Let's see if it all falls into place with what we saw today, international trade and goods and GDP. Let's see what happens. And that's going to be it for today. And then the next update will be on Thursday, the 1st of December.